Hello again, everybody. Welcome back to Accounting 1101, Principles of Financial Accounting, where we have come to the point in our accounting life where we need to make a trial balance. In our video right now, we're going to talk about what exactly a trial balance is and why we need one. We're coming off the heels of an 18 transaction marathon. If you remember, in our last video, we were just trying to do like Merle Haggard and make it through December, because we had 18 transactions in December that we had to record. We made journal entries for them. We posted them over to the ledger, and it was a marathon of accounting. And we made it through December. If you remember what that looked like, we journalized all kinds of transactions. I showed you the account impact at the account level, and then we took them and we put them into ledger accounts. Now, I kind of bailed on you. I did a couple and just told you, oh, yeah, y'all figured it out from here. But it's just copying, right? So hopefully you were able to copy and post all the transactions we made into the respective ledger accounts. And you've got all that done, because we're going to use all that information to make our trial balance. So in our video, like I said, we're going to complete a trial balance. It's going to look a little bit like what you see right here. We're going to take all the ending balances from every single account in our accounting system and write them out. We're going to have the debit balances, we're going to have the credit balances, and we're going to see if our accounting system is in balance. So what you need to know, our accounting system should always be in balance. We talked about it in the context of the accounting equation. Assets equal liabilities plus equity. But we can also look at it from the standpoint of debits and credits. Because we have double entry accounting going on, we should always be in a position where all of our debits are equal to all of our credits in dollar amount. So that's what we mean by imbalance. We're not only talking about the accounting equation, we're also talking about all the debits and all the credits. Now, we have two choices. We can, one, just kind of trust it. We can trust our system is in balance, or we can verify the system is in balance. Now, I'm a verify kind of guy, as accountants mostly are. We're not just going to have blind faith in the accounting system and trust that everything worked out okay and we're in balance. We're actually going to verify that we are in balance, and we do that with a trial balance. It's an internal accounting report. Our trial balance isn't a document that we normally share with people outside of the business. The accountants are going to use it within the business to make sure that debits equal credits. That trial balance is going to show the ending balance of every account in the accounting system. And again, trial balance. We're trying to see if our system is in balance. So we're going to make our unadjusted trial balance, and we're going to hopefully make it to where it matches up with the example. So I've got an Excel spreadsheet. You can download it. You can follow along. And hopefully, if the accounting gods are smiling upon us, by the time we're done, we'll have a trial balance that actually balances. We'll find out. So here we go. Here is my spreadsheet. I've got that up in Canvas for you to download. Make sure you've done that. Here's all that good accounting we did in December, journalized. All of that information is posted to the individual ledger accounts. You can see all that information there. You can make sure that yours is right if you're working off of the spreadsheet we had earlier. And you can see we got all the accounts updated where they need to be. So, how do we make a trial balance? Well, first step is we need to put the company name. We need to put the report title. Unadjusted trial balance. We need to put the date. December 31, 20Y through. And that's kind of how we title all our reports, isn't it? Company name, report title, and then the time period that we're looking at. Our next step would be to make a column for debits and a column for credits. And then we're going to list out every single account in the accounting system. I've got them all listed right there already to save time. They're all set up there ready to go. So once we've got that done, we're going to go find the ending balance of every account, and we're going to plug it in. If that ending balance is on the debit side, it goes in the debit column. If it's on the credit side, it goes into the credit column. So that's it. If we've done the accounting correctly, this should be an accounting slam dunk. We'll find out. And so here are my ledger accounts. And so, well, what's the ending balance? Well, our ending balance is whatever balance is left at the end here. And you see we have a bottom line on every account. And that final number represents our ending balance. And again, we've kind of been calculating as we go along. Let's say, just for the sake of argument, just real quick, that maybe I haven't been doing that. Maybe I've not been calculating balances as I go along. How in the world could I calculate an ending balance? Real simple. Whatever the positive side of the account is, we just add up the positive side, and then we subtract out the opposite side of the account. We have a side where the account goes up, side where the account goes down. We add the side where the account goes up, we subtract out the side where it goes down, and we should get an ending balance. Let's go ahead and try that. Now I'm going to go ahead and I'm just going to highlight. If I highlight, you'll notice got the sum right there, $39,480. Okay, so I've got $39,480 on the debit side. On the credit side, if I highlight, I've got $37,415. And so I'm going to go ahead and add those up. $39,480 on the debit side. And I've got $37,415 on the credit side. Now, we don't leave it like that. We just need one number. You can see I have more debits than credits. I'm going to have a debit balance. Just going to kind of subtract here. So I end up with $2,065. $2,065 would be my ending balance there. Okay, so I could figure up the ending balance that way. Whatever the positive side is, add up all the numbers on the positive side, subtract out the negative side, net the two together. That's my ending balance. So I could do it like that if I didn't have the nice, neat running tab here. Now, just to throw that out there. Now, we do have the running tab because we've been keeping track of it. I'm going to plug in the ending balance on every single account. So, we'll start here. My cash ending balance, $2,065. My AR, account receivable ending balance, $2,220. You can see I'm just pulling that final number in the balance column, making sure if it's a debit, I put it on the debit side of my trial balance. If it's a credit, I put it on the credit side of my trial balance. Supplies, $2,000. Prepaid insurance, $2,400. Land, $20,000. Office equipment, $1,800. So, all of those will have debit balances because they are asset accounts. Assets have a normal debit balance, meaning they go up on the debit side. Now, again, if something went wonky or something was wrong and I had a balance on the credit side, I would have made sure to put it down as a credit. Moving on to the liabilities, you can see liability does have a credit balance. Accounts payable. Grab that number. Moving on to unearned rent, another liability account here. Make sure we get that in there. We have Chris Clark Capital under equity, $25,000. We have that drawing account, which has a balance of $4,000. Fees earned is a revenue account. It's going to have a credit balance in it. All my expenses should have debit balances. Wages, supplies, rent, utilities, and then finally miscellaneous. So, again, I list out every account in the accounting system. I go through, I grab the ending balance, and I put it on the report. The goal is to make sure in my accounting system, debits equal credits. In other words, my accounting system is in balance and we have achieved total accounting harmony, which is always our goal. We want to be in harmony with the numbers. We want to be one with the numbers. We want to be in balance here. All right. So I've got my debit column. I've got my credit column. I'm simply going to add the columns up and see if they balance. So 42,600 in my debit column. Again, if you want to make an offering to the accounting gods, sacrifice a number 2 pencil. I don't know what kind of sacrifice an accounting god would demand, but we're going to offer some kind of sacrifice to make sure that our two sides are in balance here. So there we go. I add up the credit column. We do in fact balance. We have appeased and found favor with the accounting gods here. So there's my trial balance. What that does, it tells me, hey, debits equal credits in your accounting system. It doesn't tell me if these numbers are correct. It just tells me that it balances. For instance, maybe I put something in rent expense that should have been utilities expense. It wouldn't find that error. All this is doing is telling me whether or not the accounting system is in balance. And I have to do this step before I can do financial statements, before I can do the end of the month closing procedures, before I can do any of that. Because I can't do that stuff if I've messed something up and something isn't in balance. Okay? So, it's a checkpoint. The trial balance. We're trying to see if the accounting system is in balance. It's an important step. In this case, we're doing good. We're ready to proceed into next week, where we will learn about adjusting entries. What kind of entries we need to make to adjust the books to reflect reality at the end of the month, how we do them, and how we create the adjusted trial balance. So that's where we're going. Hopefully you're able to work along with me and get that to work out okay. So here we are. We've created the trial balance. We are good to go. Next time, we'll be back. We'll talk about adjusting entries, the different kinds of adjusting entries, why we need to make them, and how they work. That'll be next week. Further down the road, we'll make financial statements, and then we will do an entire accounting cycle, put it all together. We're about halfway through the accounting cycle here, so we are making some pretty good progress. If you have any questions on that trial balance, how we came up with it, what it's for, and please feel free to reach out. I'd be happy to help you make that trial balance happen. Until that time, until next time, take care, everybody.